Canadians, it's tax season again. That time of year when we gather up our receipts and face the music. But don't you worry, it doesn't have to be a scary experience. Knowing the deadlines is half the battle. Filing your taxes on time is crucial. It keeps you in good standing with the Canada Revenue Agency, or CRA. Plus, nobody wants to pay more than they have to, right? So grab your Tim Hortons, get comfortable, and let's break down those important tax deadlines. We'll cover everything from individuals and businesses to what happens if you miss the deadline. Spoiler alert, it's not pretty. For most Canadians, the magic date is April 30th. That's when your tax return needs to be filed with the CRA. Mark it on your calendar, set a reminder on your phone, tattoo it on your arm. Okay, maybe not that last one. If April 30th falls on a weekend, you get a bit of a break. The deadline gets pushed to the next business day. Just remember, this is for filing, not necessarily for paying any taxes you owe. You can file your taxes electronically using NetFile. It opens up on February 24th, 2025. This is the easiest and fastest way to file. Plus, you'll get your refund quicker. Remember, filing on time is important, but so is paying on time. Make sure you have your payment sorted out by April 30th to avoid any penalties. Calling all entrepreneurs, freelancers, and side hustlers. If you're self-employed, you get a bit of a reprieve. Your tax deadline is June 16th, 2025. But hold your horses. This only applies to filing your return. Any taxes you owe are still due on April 30th, just like everyone else. This also goes for those running sole proprietorships and partnerships. You've got until June 16th to file, but make sure those payments are in by April 30th. Don't forget, running your own business comes with its own set of tax deductions. So keep track of your expenses throughout the year. It could save you some serious dough come tax time. Dealing with taxes is never easy. It can be a daunting task even in the best of times. It's even tougher when you're dealing with the loss of a loved one. The emotional toll can make it hard to focus on financial responsibilities. The CRA has specific deadlines for filing a final return for someone who has passed away. These deadlines are crucial to avoid penalties and interest. If the unfortunate event happened between January 1st and October 31st, 2024, the deadline is April 30th, 2025. This gives you some time to gather all necessary documents. However, if the passing occurred between November 1st and December 31st, 2024, you have 6 months from the date of death to file. This shorter timeline can be challenging, so it's important to start early. For self-employed individuals who have passed away, the tax deadline for their spouse or estate is June 16, 2025. This allows a bit more time to handle the complexities of self-employment taxes. Just remember that interest on any outstanding balances will start accruing on April 30th, 2025. It's crucial to be aware of this to avoid additional financial strain. It's a lot to handle during a difficult time. The paperwork and deadlines can feel overwhelming when you're already dealing with grief. Don't hesitate to reach out to a tax professional for guidance. They can provide valuable assistance and help you understand your obligations. They can help you navigate these sensitive matters, ensuring that you meet all deadlines and avoid unnecessary penalties. Their expertise can be a great relief during such a challenging period. Section 5. The price of procrastination, late filing penalties. We get it. Sometimes life gets in the way. Between juggling work, family, and personal commitments, it's easy to let things slip through the cracks. But trust us, you don't want to mess with the CRA when it comes to deadlines. They take their timelines very seriously, and the consequences can be severe. Late filing penalties can really put a dent in your wallet. These penalties are not just minor fees. They can add up quickly and become a significant financial burden. For individuals, the penalty is 5% of your balance owing, which might not sound like much at first, but it doesn't stop there. Plus, an additional 1% for each full month your return is late, which can quickly escalate. This continues up to a maximum of 12 months. Imagine the stress of seeing those penalties grow month after month. And as if that wasn't enough, you'll also be charged daily interest on any unpaid amounts. This interest compounds, making it even more challenging to catch up. For self-employed folks, the penalties are even steeper. The CRA expects timely and accurate filings, and the stakes are higher. This is especially true when it comes to payroll deductions. Missing these deadlines can have serious repercussions. The first time you miss a remittance, you're looking at a 10% penalty. This can be a harsh wake-up call for many. Repeated failures can bump that up to a whopping 20%. This can be devastating for small business owners. And don't even think about messing with GST, HST remittances. These are closely monitored and the penalties are severe. The penalties for late filing and payments range from 3% to a heart-stopping 20%. It's crucial to stay on top of these deadlines to avoid such financial pitfalls. Section 6. Filing made easy your options. Gone are the days of wrestling with paper forms and envelopes. The CRA offers a variety of ways to file your taxes, making it easier than ever to meet those deadlines. NetFile, the online filing system, is your best bet. It's secure, efficient, and most tax software programs are certified for NetFile. Plus, who doesn't love instant confirmation that your return has been received? If you're not comfortable filing online, there are other options. Free tax clinics are available across the country for those with modest incomes and simple tax situations. The Community Volunteer Income Tax Program is another great resource. Of course, you can always hire a tax preparer to handle everything for you. Just make sure they're reputable and have a good track record. Section 7. Installment payments, spreading out the cost. If you're self-employed or have other sources of income, you might need to make installment payments throughout the year. This helps spread out the tax burden and avoid a massive bill come April. The CRA sets specific dates for these payments. In 2025, mark your calendar for March 15th, June 15th, September 15th, and December 15th. These dates are set in stone, so don't miss them. You can make these payments online, by phone, at your bank, or even by mail. The CRA offers a variety of options to make the process as painless as possible. Remember, failing to make your installment payments on time can result in interest charges and penalties, so stay on top of it. Section 8. The fallout of falling behind. We can't stress this enough. Meeting your tax deadlines is crucial. Falling behind can have serious consequences that go beyond just financial penalties. First and foremost, you'll be hit with interest charges on any unpaid taxes. These charges can add up quickly, turning a small debt into a major headache, but it doesn't stop there. Late filing can also delay important benefit payments, like the Canada Child Benefit and the GST/HST credit. These benefits are designed to help Canadians, and delaying them can put a strain on household budgets. In extreme cases, ignoring your tax obligations altogether can even lead to legal action. We're talking wage garnishments, frozen bank accounts, and even property seizures. It's not a pretty picture. Section 9. Stay on top tips for a stress-free tax season. Tax season doesn't have to be a stressful time. In fact, with the right approach, it can be a smooth and even rewarding experience. With a little planning and organization, you can breeze through it like a champ. The key is to start early and stay consistent. Here are a few tips to keep you on track. First off, gather your tax slips and documents as soon as you receive them. This includes income statements, receipts, and any other relevant paperwork. Don't wait until the last minute. Procrastination can lead to unnecessary stress and mistakes. Keep everything organized in a folder or digital file. Consider using tax software. These tools can help you keep track of your documents and make the filing process much easier. It can help you optimize your deductions and credits, ensuring you're not leaving any money on the table. Many tax software programs also offer step-by-step guidance. Plus, it makes filing electronically a breeze. E-filing is not only faster, but also more secure and efficient. If you're self-employed, keep meticulous records of your income and expenses throughout the year. This will save you a lot of time and headaches when tax season arrives. This will make tax time much smoother and help you maximize your deductions. Remember, every receipt counts. And most importantly, if you're unsure about anything, don't hesitate to seek professional help. A tax advisor can provide personalized guidance and answer any questions you may have. They can also help you identify deductions and credits you might have missed. Remember, the CRA is there to help. They offer a variety of resources and support to assist you with your tax filing. Don't be afraid to reach out if you need assistance. Whether it's through their website, phone, or in person, the CRA can provide valuable help. Filing your taxes on time is easier than you think. By staying organized and planning ahead, you can avoid the last-minute rush and potential penalties. Just stay organized, plan ahead, and don't be afraid to ask for help if you need it. Remember, preparation is key to a stress-free tax season. Now go out there and conquer those taxes. With these tips, you'll be well on your way to a smooth and successful tax season.